Yo! Wasabi! 你好嘛? G'day, mate. How are you? How's your mum? Or as they say in Manchester, whoa. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical analysis, fundamental analysis, with the overriding goal of planning trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I will be your guide on this journey we call Forex. It's a Friday. Hey, it's the second half of the year. Wipe the slate clean. Good, bad, ugly, whatever, doesn't matter. It's all behind us. We have holidays coming up next week, so you got to be careful. Technical analysis may be a little weaker today, just simply because many traders may have taken the day off. Monday is a holiday. The markets will be closed. There will be no live stream that day. So we got to be careful with that because there might not be follow through. The markets are likely to be extremely thin. Banks are closed. Other trading markets are closed. Stock markets closed. Futures are closed. All that kind of stuff. So you got to be very, 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 very careful. But nonetheless, here we is, and here is we shall be. So ask me questions. I will do my best to help. What's up, Maida? Good morning. Sultan says oil looks like a sell. Yeah, maybe. It was a buy earlier today. So we'll go over to oil. We'll also do gold, Bitcoin, US dollar, and Japanese yen, Swiss franc if you want it. I think it'll be a nice, easy little day today. So ask questions, get involved, and I will do my best to help. This is a resource that I've been doing, close to 20 years now, daily live streams. You're like, Wayne, that's impossible. YouTube isn't even 20 years old. Oh, I know. I've been doing live streams longer than YouTube has even been around. I'm not joking. I was the first person to upload Forex-related videos to YouTube. As you probably know, there are 5,000 or 6,000 videos associated with my work on YouTube. And there was a time when you went to YouTube and you typed in Forex, I was like the first 12 pages of just my videos. Boom, boom, boom. Which means I've been doing this longer than your last guru's probably even been alive. So take advantage of those resources. I've learned a few things along the way. Other resources are available in the description below. First one is you'll see that there's a link to the oil trading course that I'm starting next week. Right? The link is in the description below. And by the way, I've added a bonus. I'm going to email you about it. When the course is done, I'm going to work with you setting up oil trades in the live market in the early US session for a month. So not only are you going to learn all the theory about how oil is found and where it's found and how it's sucked out of the ground using conventional technology and now more modern advanced technologies. And you're going to learn about the upstream, midstream, downstream of the whole business. You're going to learn about the legal contracts and of course, how to actually trade it. But then we're going to spend a whole month setting them up live. Huh? How cool is that? So the link to that course is in the description below. A link to free training courses on Forex are in the description below. A link to FX Bootcamp, which is a community of foreign exchange traders like you. And I think the major benefit about this community is that people are hardcore. It's hardcore, serious, focused people doing serious, focused work on Forex. It's amazing. You join FX Bootcamp, you're going to find people just like you, not posers, real awesome traders. Okay? The link is in the description below. Also in the description below, a link to my book. You might find that helpful. Maybe that's where you start. Hey, I think it's $80 for the book. I don't set the price. Okay? I don't set the price. I sold the rights to that book 1,000,000 years ago, so that's up to Wiley. How they price it, I don't know. But you might find that as a resource. What else is in the description below? There's a link to tradersway.com. We all need brokers. Very few are trustworthy. Very few actually execute the trades into the interbanking system. Very few pay you good swaps. Some of them might market and sell to you that they are the cheapest, that they have the narrowest spreads. Maybe it's even free. Bullshit. Okay? Very often those cheap brokers are making money by slipping you, which means they tell you you're only paying a half a pip, but maybe they slip you another half a pip when you get in and slip you another half a pip when you're getting out. And you're like, wait, that's a whole pip more than what they were marketing and advertising. Unscrupulous, untrustworthy. Traders Way has competitive fees. Everything seems awesome. They've earned my loyalty and respect when the Swiss National Bank blew up and brokers went out of business because they were trading against their clients. And Traders Way was actually perfectly fine because they executed the trades, which is what they're supposed to do. And you think, well, Wayne, isn't that basic? I don't think that is basic. I think that is unique. So if you like all that, give them an opportunity to earn your loyalty and respect. If you're worried about, like, I don't know, that I'm doing that because I'm going to earn a commission on your trading or something like that, don't even click the link. Don't put my name anywhere. Don't reference FX Bootcamp anywhere. That's not, no. See, I don't earn a commission on your trades. So tradersway.com, sign up for a demo account, see if they can earn your loyalty and respect. Okay. All right, so let's get going. Sultan says, today, dollar news at 10 a.m. Does it affect crude oil? Well, crude oil is priced in dollars. So the answer to that would be, of course. Also today related to oil is the Baker Hughes rig count. That comes out near the end of the day. Okay. Jim says, I see Amazon has your book for $42. Oh, sweet. Nice. Cool. Still seems like a lot of money for a book, right? But I don't know. I still have carpal tunnel syndrome in my forearms from writing that book. So I'm still paying the price every day. All right, so my oh my WTI. Okay. By the way, if you have questions about the oil trading course, let me know. Again, we're going to, after the course is over, we're going to meet every single day and set up oil trades together. Only people that sign up for the course. So there'll be a special room. We'll meet likely at 7 o'clock in the morning, and we will set up oil trades. That's it. Now we might look at natural gas as well. We'll look at WTI and Brent, whatever your flavor. Okay. So I have to add that to the site. I came up with the idea meditating yesterday morning. Okay. So here it is. I'll pop that there. So I'll add that. So you get hours and 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 hours added to that course. Compliments of the firm. I just realized that, you know what? You're going to want practice executing what you've learned. Okay. Now, of course, a lot of this is just pure knowledge, like learning about the legal contracts and how to structure an oil deal. That's not going to make you a better oil trader, but it'll make you an expert in the oil industry. And then technicals here, how and when to trade, that's going to be important. And then we'll take that and we'll practice setting these trades up, and you'll know whether to be a bull or a bear, because you'll know how to analyze the entire market And then once you know you're a bull or a bear, you need to know when and how to set those trades up. And I will walk you through that process day after 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 day. Okay? Huh? Yeah. Yeah, Johnny. Johnny's like, but yeah, the live classes, yeah, they're going to be recorded, only accessible to people in the group. And then hopefully you're back in September, October period where we could practice executing those trade setups. Okay. Cool. So look what happened today. Now, how do we look at that? Why is oil, for example, a great thing to scalp? Okay. You see what this is? Oil was 106. Now it's 110. It looks like today oil from peak to valley so far, and we're only half done the day, has moved the equivalent of 437 pips. Compared to, because a mini lot is the same, has the same value as euro dollar. So if you traded one mini lot in euro dollar, the cost instead of per pip per penny for oil is the same as euro dollar. So why should you learn how to like scalp, spot, and swing trade oil? Well, today's peak to valley on euro dollar is 96 pips. So oil has moved 400% more. So you would have, let's say you sold at the very bottom of euro dollar, you'd be up approximately 100 pips. If you had, and again, that's peak to valley, like the perfect trade, you nailed it to the pip. And if you had around the same opportunity, around the same time, if you had picked the exact bottom in here, you would have made closer to 450 pips. The perfect trade in euro dollar around the same time produced $100. Okay. The perfect oil trade would have been 450. So you see the average daily range is significantly higher, which means if you're scalping, now you're not going for 25 pips on a scalp. You're going for hundreds of pips on a scalp. And you see the importance of that, especially in periods when volume and volatility might dry up. So let's say over the summer, the average daily range for euro dollar drops to more like 70 pips. And oil, let's say average daily range drops down to only 300. Much better for scalping, right? Cool. Cool, right? Cool beans. Okay. So anyways, what's the next step here? Well, it depends on how you're playing it. If you're a bull, you might be thinking about July already. And that might be your trade plan for July. Okay. Now this would be based on, risk of oil supply because of the war in the Ukraine and other issues. If you don't believe in that, what you're saying is you're more worried about a recession next year, or even this year, a slowdown in economic growth, which is demand destruction. So you have to pick a team, really. Are you on the supply destruction? Putin plays a card that drives up energy. Or are you on demand destruction? That everything will kind of work itself out. That we've seen the worst out of the war in the Ukraine, and that we're much more worried about an economic slowdown. I think you can have both points of view. The thing is, you got to be clear on which one you're trading. Okay? Mohammed says nat gas fell by 12%. Yeah, interesting, right? And will that impact inflation? And if inflation is falling, will that impact how far the Fed will raise interest rates, otherwise known as the terminal rate? Does the terminal rate drop for 2023? Does it drop from closer to 4 down to closer to 3? Wow, that'll change things as well. Okay, so these are big questions. We call them macro. They're big questions. If you were going to meet with an investor that was desperately looking for an investment opportunity, what would you pitch? Well, you'd have to pitch your point of view. You can't say, well, you know what? I live and die by the 2155. Yeah, come on, dude. Okay. At least have a story. What do you think and why? Okay. So what do you think about this? Well, if this was your trade plan, we call this strategy actually. If that's your strategy, then you're going to be looking for forms of this or forms, oops, I wanted this to be pinkish. Okay. Or forms of this and then up. Okay. Now bears, they're already got that. They already played the M3. So what a bear is probably thinking is that. Which one's right? How the hell would I know? Okay. So it's more like you got to pick one or the other. Isaac says the charts will tell. Okay. So what are you going to do in January? I don't know. I don't have a chart in front of me. Then you don't get it. Okay. Mohammed says, I think we're going down on energy. Okay, great. So no supply chain disruption. Maybe even peace in the Ukraine or something. Or that the recession is going to be hit hard and hit fast, and that the stock market hasn't found a lower low yet. So it's really a recession play more than anything. So maybe your argument is supply stays about the same, but demand will fall in the near future and in the ongoing future. Cool. I can see that point of view. Okay. I can see that. Cool. But now you got to trade it. So if I looked at your trade history, I should look at it and say, oh, I know what Mohammed's doing. Okay. Cool. Okay. So Mohammed, between now and next week, your trade plan's going to look something like this. Sell it somewhere between 110 and 111 and take it down. And your medium-term target is about 95. So a full reset, basically, because I think we were down there before. Yeah. Okay. That's Mohammed's play. Okay. To me, I'm indifferent. I don't really care what your plan is, because nobody knows the future. There are lots of variables to look at, and inside of the variables are assumptions. You assume, Putin doesn't make things worse. I don't know if that's right. I'm not here to say you're right or wrong, but I need to see you play that out. Okay. Cool. So again, if I was you, I'd be doing stuff like this. Okay. So you're going to look for a top today, somewhere around 10 or 11, and then you're going to bring it down. Okay. And that would make you feel really nice because you have a pattern like this now, where you have a top that we triple topped. Lower low, lower high, lower low, lower high, lower low. Okay, that's on one time frame. And then maybe you want to call it a 3-wave correction. To each his own, call it whatever you want. And now you're in this mode. Okay? What do you think? Do you like that idea? Do you like that analysis? Or are we going to get stable around, this 105 area where people are protecting $100 a barrel? Let's do a poll. What price will oil be on July 31st? Well, it's not really on July, before, let's say. What price will oil hit before July 31st? I guess that's good. We'll say 120 or, oops, that's the wrong one, or 95. Lucas says Saudis have been are running on max production capacity. Many will argue that they have been doing that for many, many, many years. Okay, so I'll let you guys answer that, and we'll take a look at Bitcoin. Okay. I know we got a lot going on here. Let's just clean the chart up a little bit. Where should I put it? How about maybe monthly? Maybe, how close will you want to get? Weekly, maybe? Guess weekly's fine. Let me zoom in here. All right. All right. If you join FX Bootcamp and you take all the courses, 65 hours of courses, and maybe you upgrade your account to include the swing trading group that meets once a week to set up big trades, you would see that the trade of the week for a bear on crypto was down. And this is the best price you could hope for. That's the aggressive target. And you're like, Wayne, I don't believe you. All right, so let's then change this. Let's go to swing trading bearish bias. Okay, let's drop into a smaller time frame. And I zoomed in so much you can't see the words. There we go. Check this out. Bearish profit zone aggressive. And look at the top of the market here. This whole thing is a sell zone. Remember, this is only for bears. This was created on the Sunday morning open. Okay. Okay. You see bearish sell zone and bearish aggressive target. Okay. We hit the exact top. And we hit the bottom and stopped. Look how far it came up. Hit some magic number, apparently. $20,871.70 was important. And we headed straight back down. And this is, by the way, an exit zone down here. That's why it's a profit zone. Okay. Isn't that interesting? That somebody knew this price and traded it. Somebody knew this price and got out. Somebody knew this price, and clearly whoever bought it off the bottom got out, or somebody resold and got in, and now we're back into a new out zone. My point here is we are using the right tools to trade Bitcoin. Maybe it's someone has an algorithm. Maybe I've trained enough people now on pivot points. I used to go to conferences all the time, 3, 4, 5 times a year. And I would be the only person discussing pivot points. Me, that's it. Not another living soul that was up on a stage teaching and preaching had talked about pivot points because nobody knew how to trade them. Now, it seems like it's Main Street enough that even Bitcoin has these programmed into the algo or into the minds of the traders, which means you need to know how to do this. Jim says, before I forget, no day trading group on Sunday. That's correct because all the banks and everything are closed. Yeah. Okay. Neat, right? All right, let's go back to oil and see what you guys thought. And that's a market for you. That's a market. That's what market is. It's 50-50. Now you're like, Wayne, it's 43.56. Yeah, well, we had enough for a proper sample size. You need at least 30. But I imagine if it was 300 or 3,000, you'd get about the same, about 50-50. One more vote for bears would change it statistically quite a bit, closer to 50-50. So just one more vote could have changed it. So it's 50-50, which means you can't be neutral. You should be bullish or bearish. And if you're a bear, you wait for a good bearish setup. If you're a bull, you wait for a good bullish setup. And everyone that doesn't wait for a good setup will be the monkey in the middle. In this case, a pig. You're not a bull, you're not a bear, you're a pig, and pigs get slaughtered. Okay. Gold coming down today. The interesting thing is this is typically a good time of the year to buy gold if you're looking at seasonality, which means as we approach this zone, you might become more and more interested in thinking about buying. Are you buying when it's going down like this? No. Okay. This is daily. So let's say over the next couple of weeks, it does this. Do you buy something down here? And if you're a bull, yeah, you probably would. Richard says, pivot points are more of a stock thing. No. It started with futures. Okay? It started with futures, not the stock market. I don't know. Okay. So anyway, so you got to say maybe around 1750, you're interested in buying gold. You might argue that this is the right time. You just need the right price. So you get down there, and now you need a reversal pattern around that, and you take your shot. And it would be something you might hold for the year. Okay? Now, what you don't know is what if gold is falling because central banks are unloading their positions? What would that do? It would strengthen their currency. Why would they want to do that? Well, strengthening a currency reduces inflation because now you need less currency to buy the same thing. Richard says floor traders on the New York Stock Exchange were using it. Not really floor traders. It was futures traders in the trading pits. So it wasn't stock traders. It might have been S&P 500. It might have been soybean meal, but it was futures traders. But then does that mean stock traders were not? No, of course. Then that would have graduated over, and yeah. The idea is, here's the pit and this is you, okay? And then you have a runner, and then you have a desk with someone here on a phone. So I'm going to draw a phone. Okay, that's the wire, and then you would have the office. And and then you would have a desk in the office, and then clients. So clients say, "Hey, we need to buy and sell some stock today." The office gets that, calls this person. This person gets the orders, and you have buy number 1, 2, 3. And then you have sell 1, 2, 3, and this person does a hand sign to this. This guy does some screaming and hand signs to that, and then this guy places the order. But what's the best price? When do you buy and when do you sell? Well, you want to sell high and you want to buy low, so you do some basic calculations based on, let's say, what happened yesterday. Okay, what was the close yesterday? Because remember, if you want to sell up here and you want to buy down here, and you have all these customer orders, right? So basically, what was the close? And if you can buy below the close, that's great. And if you could sell above yesterday's close, that's great too. And you get at least a relatively decent deal on price. So you have to know at least that. But then what was the top of yesterday? Okay, what was the low of yesterday? Because how below? And then what was the pattern in closes? Were the closes going like this way over the last few days, or were closes like that? Because then the low could even be lower, or the high could even be higher. And so you're doing all these basic calculations. So would a stock trader do it? Sure. Futures trader? Sure. Okay. And remember, banks don't work on an exchange that way. So it was bank to bank. 24 hours a day. Okay. But I started trading with pivot points 2005 maybe, and you couldn't get them on a broker. There was no broker, and it's still weird to me, it's not built into MT4. Why? It's crazy. We got all this other crap. What's an alligator oscillator? Who gives a crap about that? Okay, we got 19 different oscillators, but no pivot points. So imagine 20 years ago, okay, I hired a developer who made a custom indicator, and I put that into the deal book, then the deal book 2, then the deal book 360. And it got to the point where the broker called me and they're like, we have clients calling us, trying to open up accounts so that they use pivot points. And then they're all pissed off because it's not in the platform. They don't have pivot points. And they're opening accounts and then they're like, where's the pivot points? I see Wayne has these pivot points, but they're not there. I know he uses them on the Dealbook 360. Now I open an account. Now I got this Dealbook 360 and there's no pivot points. So the broker calls me up and they're like, could we have your pivot points? And I said, sure. And I gave it to them for free. Why? I didn't want to make money on it. I wanted people to be successful. So that's how long I've been using pivot points. Your oil course will also be helpful for stocks like Schlumberger and Halliburton services that are great. Well, you'll learn more about them. So, for example, if you don't know what Schlumberger does or what Halliburton does, then you will learn about that part of the industry. And if you knew about the entire energy complex, you could read reports like rig counts, but you could read reports from OPEC and read between the lines. You could read IEA stuff. You could go to the Exxon website and listen to the CEO do his annual speech or read the quarterly reports and understand, so that you would say, oh, well, maybe that's good for Schlumberger. Maybe that's good for Halliburton. Maybe it's bad. And you'd be more informed on whether you should be trading those. But am I going to say this is how you trade Schlumberger? No. But if you're interested in trading companies, you would know, you'd be more informed about, distribution companies like the ones that own pipelines, or service providers like the actual drillers and stuff like that. You'd just be more informed. You'd know how all the pieces of the puzzle fit together. Okay. Okay. Take a look at some indices here. Pound coming down like a clown. Dollar going up. Okay. Everything's right as rain. Okay. Euro dollar yesterday hit the bottom. Okay. By the way, this is a sell. Okay, and this is an exit. So people generally caught that. Bears generally caught that, wrote it out, hit the target, exited. I call this an Arctic turtle, by the way. They stretched out to hit that target and then it popped up. And then what did they do? They, meaning these people. They sold here. They exited down here. Then they sold off the 4-hour 21. And they're either going to exit here because of the holiday, or they're going to let it run, because if you're going to sell a lower high, you would only do it if you expected a lower low. If you don't expect it to make a lower low, like you think the support's going to hold, then you wouldn't have traded in the middle, because then what you're telling me is, Wayne, we're in a range. Well, you would never sell in the middle of the range, right? Don't be a stupid. So if you sold here, you are expecting a lower low. Doesn't mean it'll make it, but that's why they did it. So if it pops here, maybe they're going to be quick to get out for a small profit, or they just jam their stop at break even, go away and check it out Wednesday of next week. And they're like, oh, I got knocked out, which is probably the better thing. Not that that would be more probable, but if you're going to take that risk, you got to get the reward, right? So what are traders thinking? We are going to down to 102, maybe parity in July. Okay. That's that. By the way, a couple of weeks ago in the swing trading group, we were talking about below parity in here. Even pound dollar, even euro Swissy. You guys remember that? 2 weeks ago? Below parity on euro Swissy, below parity on euro dollar. Okay. Let's go down. This is a daily chart now. Okay. I have a stop here with 175 pips locked in, and it just dropped like a ton of bricks, man. So now I'm up over 300 pips. So I'm going to lock in 250 just to be modest. The problem is it'll almost certainly come up, hit that, and then drop. So I got to be careful. So I could just split the difference and take profit now. Huh? So I guess to be conservative, I can put it about there. So we'll say 200 pips. Cool. A little bit better. Because this would be the second role reversal. To hold that down, this would be the primary role reversal. Denise says, yes, and have a nice holiday. Hope you have a nice holiday. I will be working on the oil course, on the oil trading course. That'll be consume my day today and most of tomorrow. Pig, once again, okay, pretty simple. Kicked off here, has fallen, 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 fallen. Yes, we've hit a problem here, but once again, whoever sold this is a trend trader. Because that is a lower high. If you sell a lower high, you expect, demand a lower low. Okay? Problem is, I don't have another target. It's crazy. Okay? What happened to the pound this year is amazing. I don't know how much time I can put on here, but let's indicators, FX Bootcamp pivots, 25 years. Okay, that'll be enough. I don't think I have that much data here, but let's take a look. When was the last time we hit either S3 or R3? I can only go back to 2017. Okay, looks like the top at least was M3. So I could say maybe the bottom was M1. The top here was M4. The bottom here was S1. The top here is M3. The bottom here is, I'll put S2. The top here, we'll call that R1. And here is the top is central pivot. Okay. Now, rules of engagement. I'm guessing that was an M1, but I don't have the data. There's just not enough candlestick data. Okay. Okay. If you hit your target early, okay, you head back down, counter trend trade to here. Okay. This is a sell, and the target is here, so it fell until the end of summer. This M3 is a sell. The conservative target is M1. The aggressive target is S2. So This and this makes sense. This was a mediocre year. This makes sense. Okay. Notice the role reversal again. It can go back to here. So that makes sense. Out of position trade, topped out, sort of middle of nowhere, really topped out on this old pivot. So mediocre year that year. Then rallied up, hit the central pivot, and this is supposed to be where we are. And you can see going back 1, 2, 3, 4, and even 5 years. Like down here is ridiculous. Ridiculous. It's unbelievable. And I wish I could go back the full 25 years. I don't think I can. Maybe if I turn that off. I don't think so. Can I? Oh, I can. We can go back even more. We're looking for R3s or S3s. No, no, no. Look at that. Beautiful. M2 to M4. Nice. No. Oh, there we are. 2016. Look at this. R3, R3. Sorry. S3, S3. And then look. Okay. It's amazing to have this marked. I don't remember marking this. I think maybe I did do this in the swing trading group one time. Anyway, so what I'm expecting is something probably like this, but it's still quite rare. Let's go back. No, no. Look, R1, not R3. But notice that these numbers, guys, clearly they mattered, don't you think? Don't you think? Like, doesn't it look like people are paying attention to these numbers here? Would you analyze this and say institutional investors are using these numbers? Look at this. Remember, you know them in advance. It's not reactionary. You knew it in advance. So this number here, which we hit, looks like in the middle of July, you got on January 1st, and probably way out there in like November, you had a pretty good idea of what that number was. 71.62, right? Sorry, 171.62. Let's see. Nope, nope, nope. There we go. 2008 and 2016. Let's go back. Look at this. You think somebody knew that that was the likely top? Or is that a coincidence? Okay. Look at this. M2 to M4. Perfect year. Perfect year. Textbook. Look at this, guys. M3 to M1. Dude, textbook year. Look at this. Hit this, counter-trended for months, and then look at that. It hit both M4 and R2. Amazing. Sometimes you blow the doors off, but amazing, right? And I'm going back, and I'm going back, going back. Oh, we got that one there, R3. So that's the year 2000. And that's it. So in 25 years, we've hit S3 3 times. And that's where we is now. 3 times in 25 years. How extraordinary. But what we've learned is it can have another leg down this year. Okay. Richard's like, hey, will I get the MT4 course? When you sign up for FX Bootcamp, $88 a year, you get all courses. Okay, all recorded courses. Okay, the oil course is live. So you'll have to upgrade your account to unlock that. But just to be a member of FX Bootcamp, it's only $88 a year, and you will get an amazing education. Does it cover pivot points? It covers it in the technical analysis course. It covers it in the day trading course. It covers it in the swing trading course. Is it in the price action course? Maybe. Is it in the original boot camp? Yes. So there are probably 3 or 4 different courses that cover pivot points. Yes. I'm also, by the way, free bonus for everybody. I'm in the process of having the developers put in an area on the website where you'll be able to download all the indicators and the installers. Okay. Okay. You're welcome. So anyways, nice. Downtrend is continuing. Isn't it nice to be a day trader? Or I mean, a trend trader? Thank you, Jim. I enjoyed the macroeconomics course. I enjoyed that. To me, it was personally fulfilling to share that type of information. And we already did this one. Cool. Zip over here. Yen yen. Cool. All I can say about yen is we have opposing forces, and you need to kind of pick one or the other, otherwise you're going to get caught. Okay, yield curve control is an issue, and then seasonality is the other. Okay. Many of you have traded with me years and years and years, and you know this time of year, in particular, the Fed meeting, June 16th, okay, 17th. Okay, we'll put it there. Okay, typically around this time of year, I start buying yen. No, Frank, but I can do that for you. Okay. So that's typical. Is that what's happening? I don't know. But this upward trajectory was heavily influenced, and this one was heavily influenced by the Bank of Japan intervening. There is no microeconomic course. Okay? Only macro. Micro has to do with corporations and production. Okay? So like macro looks like this. Demand, supply. That's macro. Okay? Micro would be demand and marginal cost. The per unit cost of making a widget. Okay? So if you have production, whoa. Whoa now. Okay. So if you have production, not productivity, but production of 1,000 units, okay, your marginal cost per unit might be $1. Now, if your production equals 2,000, so now you've doubled production, because of the economies of scale, your marginal cost would be equal to $1 per unit times, okay, I guess you can do it this way, 30 cents. Because every time you double production through the economies of scale, your cost per unit drops by 30%. But as I said to everybody, $88, okay? Oh man, this mouse is for all video courses. All of them. So is macro in there? Yes. Are learning how to trade with pivot points, is that in there? Yes. Is a basic overview of many different technical indicators like Andrew's pitchforks, is that in there? Yes. Well, what about day trading? Yes. What about swing trading? Yes. What about trader psychology, like taking control of your trading? Yes. What about a basic overview of what just the basics of Forex is? Yes. Am I going to learn balance of trade and terms of trade? Yes. Will I learn about what? Carry trading and swaps? Yes. Okay. Richard says, what macro signs do I watch to know when the yen is strengthening? Okay. Couple of things. Go to the website, because on their website, as Jim said, go to the website. Okay. The Bank of Japan, preceding these moves, posted press releases telling everybody. In fact, they told you specifically what they would be buying and when they would be buying it. Okay, there's one thing. Another way of looking at it is sentiment, risk on or risk off. Or recession or expansion. Or X minus M. Or seasonality. Okay? Or monetary policy. So, monetary policy, for example, policy, okay? Monetary policy, for example, created this. So if their new policy is to stop doing that, then that might have the opposite effect where they allow the yen to strengthen. Okay? But that also fits perfectly in seasonality. And if we go into a recession, risk off, Japan exports less, but they still import oil, and oil prices are high. Do any of these have an impact on the value of the Japanese yen? Uh-huh. Do they sometimes oppose each other? Uh-huh. But what's the biggest down day you can see here? Canada Day. How many people heard me preach Canada Day being one of the most important trading days of the year? How many people have heard me over and 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 over? Okay. Oh, great. Cool. I bet you didn't even know July 1st was Canada Day. So if I had said July 1st, you might not have remembered it. Well, I am joking because I'm Canadian, but I'm also trying to anchor knowledge. So they say people forget 95% of everything. And I figure with me, people forget 99% of everything. So I have to find a way to anchor it. Okay? But it's not that this is terribly important, like it's going to be the biggest drop of the year. No, but what we do know is this period can be a turning period. And that's what we call seasonality. So Frank says, hey, I thought you were joking. What's the reason for that? Join FX Bootcamp. Just join. What's the reason? Because I said so. Okay. So, turning point. Huh. Hell of a coincidence. Is it the start of QE? Well, that's part of it, of course, right? Richard says, hey, yeah, I'm fixing Richard. That's cool. Do you want me to start singing Coldplay out loud? No. Cool. So maybe it's Aussie related, huh? Oh, well, maybe it's CAD. Or maybe it's pound. The US dollar is strong. Okay. Japanese yen is stronger. Swissy is strong. Japanese yen is stronger. Okay. What was the plan for this week? Okay. This is the buy. Based on that buy, this was the target. Can anybody confirm that? That this, if you buy here, which is, by the way, higher high, higher low, but based on the pivot points, if you buy there, that's the exit. Whale oil be. Huh? Cool. Okay. There's hope. I'm telling you, there's hope. Okay? Now, what pivot points can't do is say, okay, what pivot points can't say is like, oh, we're going to go to here. No, that's not what happens. But it could say here, let's erase the other stuff. It could say here is generally a good opportunity to take profit. Okay? And then maybe here you see the double bottom, higher high, higher low. And that, okay, you should be worried about here. And it just keep going and keep going and keep going. My most aggressive target, do you remember pound dollar annual pivots? And I said, you just rarely see S3. And it happened 3 times in the last 25 years. I said, I want to go back and look at how many times did pound dollar hit annual S3s or R3s? Because those are my most aggressive target. Okay? Let me introduce you to R3. Holy smokes, eh? Okay, the pink zone is the weekly target. The R3 is MR3, monthly R target. So, like, they don't tell you that that's where it's going. You must make the decisions. But it does tell you this is a common area of taking profit. This is a common area for taking profit. And this is like the most ridiculous dream you could possibly wish for. That's sort of like a genie in a bottle trade where you're like, I'm going to target R3. Dude, that is rare. But it does happen. But it's another point in which you should seriously consider taking profit. And after that, I don't have any other targets. So look, it can happen where you do one of these dipsy-do things. Even through R3. What the hell happened there? Okay. Rolled over at R1. Came over here. Like, it's craziness. Craziness. Crazy. So I'm not telling you it's going to buy you a yellow Lambo, that it's going to fix you. But you need to know the rules of engagement, because we call it the fog of war. You go to boot camp and they make you crawl through mud and pig guts, and they're shooting M16s in the air or whatever they use now. Right? Maybe there's explosions there, and then you're like, run. Then you climb over a wall. Keep running. Okay? Then you grab the little rope and you go across the water. Really, truly preparing you for combat, right? Or at least getting you into shape. Then you get sent to the jungle. Yes, this is a Vietnam story. Yes. Otherwise, you just find yourself in the desert. But anyways, let's say you're in the jungle. You're in shape. Yeah, you shot some targets with your rifle a few times. That's cool. Then your commander tells you the chain of command all the way down to your platoon officer what the plan is. You're going to go over there and you're going to look for some bad guys. If there's bad guys over there, you shoot them. You're like, okay, cool. And off you go. You've been well trained. You've shot paper targets. How different could it possibly be? Hey man, you were crawling through pig guts. You're tough now, right? Then you respond to the fog of war where you don't even know where the enemy is. You practically walk on top of them before you find them, and then it's a shit show. All hell breaks loose. You understand? So yeah, it's really your ability to respond under duress, knowing the rules of engagement, knowing how to use your tools, knowing what to do and what not to do, and then reacting appropriately when you're in the live market. It's tough, man. This is a tough gig. Well, see, Andrew, I don't want you to think that way. Don't use your tools like a machine, would be my advice. Okay? You have machine learning up here. So I'd rather you use the tools properly, but learn how to think properly. Your best algorithms are up here. So I want you to have an opinion about yen. See, the pivot point doesn't necessarily say yen down. Seasonality doesn't say yen down, but they kind of do if you filter it properly. So what day do you pick the grapes on your vineyard? Have you ever seen someone do that? They walk outside. They're ready, willing, and able. They have 100 laborers standing there with boxes and shears. And the guy goes out. He's been up all night watching temperatures. He's watching weather patterns. They even have satellite data now to show moisture levels of the soil, because on the side of the hill it's going to be drier, the lower valley is going to be wetter. How does this impact Cabernet Sauvignon or Pinot Noir? Or as they say in Australia, Shiraz. And gathering all this information. So the sun's rising. Is it going to be a warm day? Is it going to be a dry day? Was it a hot summer or a cool summer? It's grabbing the soil. Smelling the soil. Standing up there. And he's like, maybe tomorrow. Okay? Or you can have the algorithm that says just pick it. Okay, whatever. I'd rather you be able to understand the technology, but still be that artisan of the trade. Okay? I don't want you to trade because of a pivot. I want you to trade because you're waiting for the pivot. Okay? There's a difference. I don't want you to trade because your MACD told you. Okay? So for example, if you wanted to sell in here, or sell in here, or sell in here, or sell in here, I want you to recognize those levels and say, well, you want to be a bear, and for whatever reason, you think those are tops. And you're paying attention. And then you see, can you see it? Roll reversal. Can you see it? Roll reversal. Can you see it? Roll reversal. Now, in all these cases, you were somewhat right or just a little bit right. Like it fell only an entire week. Okay. This one only fell for 3 or 4 days. Okay. Well, in that case, these are reasonable opportunities confirmed, but you didn't do it because of the pivot point. You did it because you wanted to sell it, and the pivot points were important, and the price action was important too. There's a lot going on here, but enough for a human brain to rely on. Okay? And now, the other side is, boy, if you were a trend trader, it was so much better to just buy the dips than sell the rips. Now, this is where seasonality comes into play, because this has much more meaning than this. Okay? This is likely profit taking. This because of seasonality, when you happen to go out and pick the grapes. See, I didn't cover the, right, like it's assumed that you're going to harvest your grapes in the autumn. That's why you already have workers ready, willing, and able. You've already hired them. They've already come out to your vineyard because you have a reasonable idea of when harvest happens for grapes. Is it July? No. Is it September, October? More likely. Where is your vineyard located? Germany? Spain? France? Is it white wine? Is it red wine? Is it Greece? Greece? Huh? So you pick your months. And of course, you can't just copy that and say, well, that's when you harvest in Australia. No, it would be the opposite, right? So anyway, so you have this reasonable idea. And like this could be, in years past, very often around here is harvest time. But we don't know. And that's why you still get the person out there reading the weather patterns, knowing the history of the weather that year, knowing the chemistry of the grape. See, if you leave it on 1 or 2 more days, especially if it's warm days, the sugar level contents of the grape itself goes up. And that might be desirable to the wine you're trying to make. So you're like, another 2 days. And the sugar density goes up by 5%. The viscosity changes, right? So you're trying to get this chemical composition. And then one day, now. Okay? And so if you were waiting to harvest here, and then you get this big down move, okay? And you believe that this is harvest, meaning like that's the best this pair is going to get this year. Time to pick the grapes. Then someone else might have this for a plan for this month, for July. But it's not the pivot that makes it happen, because technically this is still an uptrend. At what point does it not become an uptrend? Lower low? Well, by that time, it's already happened, bro. And you might have made 5 or 6 or 7 or 20 losing trades buying dips when you should be selling rips. And the thing is, you don't know jack about wine. Okay. All right. I think we'll just leave it at that. It's been a day, huh? What is it? 10 o'clock? 10:30? 10:30 in the morning. I'm exhausted. Well, happy Canada Day, everybody. Happy Canada Day. I hope you have a wonderful 4th of July as well. That's American Independence Day, by the way. I would like you to join the oil trading group. Like I said earlier, not only are you going to get 15 hours of live training, but on top of that, I'm going to add another 15 hours of live trading. So now it's 30 hours of training. Live lectures and live charts. Sign up. I want you to. I think it's important. That's why I'm doing it. Like I showed you today, 100 pip day on the euro dollar is good, but oil's gone up at least 400. I haven't looked at it in a while. It might be on its way to a 700 pip day, and euro dollar might make 150. Cool. Manus says, any New York August meetup? I don't have one set yet, but maybe. Why, are you going to be there, Manus? Maybe. Talk me into it. Let's do it. Anyways, peace on earth. May the pips be with you. May our profits be above average. Markets are closed on Monday. Be careful. Okay? Be careful. But I will see you. Oh, wait. I don't know if I'm going to see you even Monday night. I might not be able to do Monday night, too. It's 4th of July. I got family stuff. And I won't be home. That's the issue. Otherwise, I normally would. So anyways, I'll see everybody Tuesday. Faux show. Last day when's the last day? Well, the oil course is starting Wednesday. Let's put it that way. Okay. So Frank, no, Mondays, I don't coach when markets are closed. When banks are closed, I don't coach. Ever. Peace on earth. May the pips be with you. May our profits be above average. Cheers. That just happened.